Hey guys, Yusuf here, and in today's video, I'm going to go over the lens of how I view the crypto markets today and how it's helped me to turn a couple of $1,000s into millions of dollars in the past 9 years that I've been investing. And this will probably change in the future, but as of right now, this is sufficient enough to help me navigate the markets more efficiently. So we're going to kick it off with the token is the wrapper, because this is extremely important when it comes to understanding how to treat your investments. So token is the wrapper. What do I mean by this? Attention is what you're mainly trading. The token is simply wrapped around attention, and the attention shifts from different forms. So in 2017, we had different kinds of tokens that no longer exist today. You had the Chinese Ethereum, you had the Korean Ethereum. And if I had to ask new people who came on the scene in 2021, what are those coins? They simply wouldn't know because attention has shifted. And that's what happens constantly in crypto and will most likely continue to happen until we have established blue chip winners that are here to stay. And these are coins like Ethereum, XRP, Hype. These have been here, at least a couple of them have been here for multi-cycles. Hype is the newest one, which will probably exist from what I'm saying for multi-cycles. So attention is what you're trading. And the reason I bring this up is because it's important to understand that you shouldn't get married to your coins, because time and time again, history has shown us that over time, coins will likely retrace a huge percent against Bitcoin. They simply cannot sustain their values. And this might change in the future, but as of right now, this is what we're operating with. And the key idea here is when you're looking to trade attention, the value comes from how many other people can see what I see, because you want the trade to have other people seeing what you see. You don't want a completely crowded trade. I think for the most part, when people say a trade is crowded, it doesn't really matter, because you want to have other people seeing what you see so the liquidity can flow in the token, right? So attention is the main thing we're trading when it comes to crypto, and is especially true in 2024 because it was mainly about memes, and memes have no fundamental value other than attention. This can be different for tech coins, and I'll talk about that in a little bit because we have different kinds of attention. So the first kind of attention is, like I said, meme coins is fleeting attention, right? We have low caps and memes mainly fitting this fleeting attention idea. And we have memes being produced at a very, very fast rate, which means they have to have a strong capacity to hold that attention, which really isn't up to the token. It's mainly up to cultural shifts and social media and things that is outside of people's controls, right? We had Dogecoin come on the scene as the first successful meme, and the reason it did it was because of chance. It was a joke, and it managed to catch on, and it's held that status as the king of memes as of right now. So fleeting attention, low cap memes, these are the kind of plays where you want to take profits, lock in profits, and not hold for too long, because you don't know when the game of musical chairs will be over. After attention has shifted, mostly forgotten, you can see charts that have gone parabolic, gave you that 50x, and then pretty much died or forgotten. There's 1,000 charts out there in crypto land for memes that have actually worked like this. So this is fleeting attention. You want to take the money. If you get lucky enough to get into the coins early, just take it out and look for the next play. This is not something you want to believe in. Some might argue, yes, you needed to have that belief initially, but I think when it comes to someone experienced, they know the line between, okay, I got in early and believed, and now that belief has to pay out. Otherwise, there's no use for it. So the next type of attention is increased attention. So Fartcoin is an exception. Zora was an exception. Virtuals. Okay, these are coins that even though they've had drawdowns, they've managed to keep a large portion of the attention still intact. We're talking about coins like Fartcoin that have managed to stay in the hundreds of millions of market caps. Even though it's down from 2 billion, it still holds a lot of attention, and it's actually one of the most volatile coins. Once we get back into a more positive zone, it's one of the first ones to move. Zora had attention. It had a lot of attention that lasted for a few months. It had a nice, I think it was a 15x move. People still talk about it, but the attention is dying. But it's one of the coins that had increased attention when it was running. Lots of liquidity there, lots of money being able to be moved around, right? Virtuals, same thing. Virtuals has been talked about for the past 2 years and continues to put out innovations and projects that people continue to talk about. So these are projects that have gotten increased attention and are names that are known within the crypto space. You don't really have to talk too much about them or explain them. If you're a native within crypto, you know these names without having to look into them. These coins have a chance to make a comeback with new innovations. So virtuals can definitely make a comeback if it brings something new to the table. Zora, I think they've, even though they're on the list, I think they've burnt their customer base by having a lot of drama surrounding them that wasn't too popular. And Fartcoin needs no new innovation. It just has the increased attention because of its IP, you could call it that. And then we have lasting attention. Now, these are the coins you want to hold if you believe in them, but you don't want to hold them through a bear market. These are coins you buy during the lows and sell during the highs and then do it again for every cycle. So these are multi-cycle holds. Like I said, Tau could be one, Hype could be one. They haven't been through bear cycles before. These are new on the block, but we've had Aave, Link, CRV. These have produced good returns when the bull has come, as long as you bought them during the lows. Aave, one of the biggest DeFi banks, you could call them, in the space. Link, the Oracle in the crypto space, and then CRV, the lending protocol in the crypto space. These are names that are known within crypto and are blue chips within the respective niches. They provide heavy utility and have staying power. So these are important to identify during the lows of the bear market, and then you want to ride them throughout the highs of the bull market, sell them and rebuy them possibly for the next cycle. That's why they're called multi-cycle holds with lasting attention, because they do provide actual utility and their tokens do offer benefits to their holders. So these are the different types of categories I've placed certain tokens in. And when I'm trading certain tokens, I don't just buy low cap memes and assign them in the increased or lasting attention. Most of the low cap memes I buy, play them for a 5x, play them for a 10x, 20, 30 if you're lucky. In this current environment that we're in as of April 14th, they're simply not long-term holds. They're for quick spins, get the profit out if your coin managed to capture liquidity, and then stay in cash and wait for the next one. It's important to know where your coin stands. Obviously, it's going to be difficult to find new coins that can be in the lasting attention. So keep that in mind. Now, let's move on to the next phase here, which is the game of musical chairs. Liquidity is rotated. If attention is the first thing you're looking out for, the next thing you're looking for is liquidity. Pay attention to monetary policy, right? The key thing here to pay attention to is, are we in a tightening phase or are we in an expansion phase? In the bull phase of 2024, 2023, 2025, we've been in a tightening section, which has been in the hard difficulty. In 2021 and 2020, we were in expansion. It was extremely easy to make money. You don't have to be as selective when you're picking coins. You simply buy and hold. Higher ceilings in the market achieved, much easier. If we look at coins that ran in 2021 and 2020, you'd be surprised by the market caps they've managed to achieve. One coin that comes to mind was Theta. I was involved back then. It ran from $60 million to $20 billion within I think it was a year. And that was an insane move pulled by one of the coins back in 2020. We also have coins like DAG. It was around $7 million, I think, and it ran to $1 billion in the time span of 6 months. Crazy moves pulled off in the expansion phase of the market. The tightening phase is much harder to play. You have to be much more selective, much more patience, and more rotations into cash required to be safe. So in this phase of the market, if you manage to see your coin run or multiple coins run at the same time, there will be a massive pullback phase. Think of it as tide of water rushing in, and then it rushes back out, and that's the liquidity being pulled from the market. And that's the game you had to play in 2024. So as long as we're in a tightening market, the name of the game should be to protect your cash and be much more selective with what you're playing with and have much more patience, because the plays are going to be a lot more concentrated in a single niche. In 2024, the niche was memes. Doesn't mean it has to repeat, but that's just what we got in the tightening phase of 2024. I think we do have an expansion phase coming up. If the market, if the Fed starts printing, we'll be in a much more easier market come 2028, 2029, potentially. Yet to be seen. We'll have to wait and see what interest rates do. But currently, this is what we have to do. We have to identify the environment we're sitting in to decide how we play the game. And as of right now, it's just a game of patience. In today's market, you just have to be patient, you have to be selective, and you have to wait until the conditions change to bullish, because not only are we in the tightening phase, we're also in the bearish tightening phase, not even the bullish cycle. So the bullish cycle pretty much ended, I think, when Trump got inaugurated and he released his meme coin, and then the market pretty much began its slowdown after it topped off with the news officially hitting in December 2024. So that's something to keep in mind when you're playing the crypto game. So to summarize, liquidity and attention are important wheels in the crypto machine, and you have to know where attention is being placed. Currently, it's within AI, real world assets, and I would say DeFi has a bit of attention with stablecoin adoption. That's what you have to pay attention to. Anything revolving around that potentially has lasting attention, because a lot of the space is focused around solving certain problems revolving around those narratives. And then you just have to pay attention to, when will liquidity be rotated back into the markets? So now let's move on to the next lens here, which is a shift in psychology is required to make profits consistently. What do I mean by that? Let's take a look. Acting on FOMO. So you have to learn to see this market as abundant in opportunities. A lot of people tend to approach this market as a lottery ticket, and if they don't get this win, they'll pretty much never make it. And this is a problem because this market has constantly, since I've been in the space for 10 years, constantly comes out with new kinds of experiments, ideas that are interesting, and a lot of people on crypto Twitter catch on to them, share them, and it never stops. The game continues. Things you've never thought of come out, and you start experimenting with betting on these on-chain experiments. When you know you can miss one opportunity and have it be okay because you can simply catch the next one, it changes the way you approach the game. If I have a runner, I'm not going to FOMO into a coin that has already moved 300% in a day just because the whole timeline is talking about it. In fact, usually when the whole timeline is talking about something, it's usually time to cash out because the timeline is actually providing you with liquidity to take your money out without seeing too much of a slippage or causing too much of a crash. There's actually a cushion there for you to get out. Again, this depends on where we are in the liquidity cycle. Are we in a tightening phase or the expansion phase? In the tightening phase, you definitely want to take your profits. In the expansion phase, you could ride it for a lot longer. It just depends on where we're at. So we most recently saw this with Tau, and we saw Tau run about 120%. We had Chamath talk about it with the NVIDIA founder, and in fact, it was a local top because the whole timeline began talking about it, and then we had Subnet 3 rug. These are just events that have happened in the crypto space that are a great example of what I mean by you don't have to act on FOMO. There will always be another opportunity to get in because the market punishes FOMO. Adopting this mentality results in better entries and better choices in which coins you buy because you're more selective. You're not worried about catching this one coin because it's the only chance you have. That's simply not how it works. When you see that one coin moving, it sets the precedent that liquidity might be coming back on chain. Not all the time, but some of the time when you have a first runner, it sets the stage and lights the match for liquidity to come in on the next coins, which are going to run as well. The beauty about the crypto market is that innovation and competition breeds gem. Constant experimentation and developments in this space bring in more talent who create coins and opportunities for traders. And again, I can give you a real world example of how this has happened. We've seen huge experimentation within the crypto sphere after OpenAI released ChatGPT. Once we saw that, we saw a bunch of AI projects come into the crypto space and continuously up to today launching new projects to see what sticks in crypto. I mean, BitTensor, you can see all those subnets trying to solve real world problems there are coming from the AI explosion. Now let's take a look at the secret here. A mentality shift is required. There is no actual gem. There are hundreds of gems, and liquidity is simply rotated, so there will forever be gems as long as the market exists and market conditions allow for it. And let me add this as well. Let's say you called hype a gem. You'd be right because if we look at it from a objective point of view, it is outperforming the rest of the market. That is correct. And I would classify that as gem-like behavior. However, hype has also given you multiple opportunities to get into it. If we pull up a chart, we can see that it went all the way to $55 and then crashed back to 20. So if you thought it was a gem at 55, it allowed you the opportunity to buy it at more than a 50% discount somewhere down the road, which is why you have to move away from acting on FOMO because the market will always give you an opportunity because there are two sides of the market, buying and selling. And in a tightening market, well, you're going to get more opportunities to buy than any time else. And this comes back to liquidity will always be rotated. There will always be a buy and sell phase for you to either buy tokens or sell them at a high and low price. It's just hard to do when you're acting from emotions. And it's one of the hardest things for traders to understand is emotions isn't the place to come at this from. It comes from understanding the market in a very specific mechanical way. And that's why I'm presenting this here. So a relaxed mental state with no forcing allows you to trade in the right way. You let the trade come to you rather than forcing yourself into the trade. And in a tightening market, which is where we're at right now, preservation is the name of the game. You must have capital to participate. When you do find a gem, you have to ask yourself some questions. Where will liquidity go when the conditions are met? So right now we're in the bear phase of the market where we do have multiple gems in the market. You just haven't found them yet. Or if you found them, the attention and the liquidity simply hasn't entered them. Selecting this is a requirement. Not every coin at the lows is a gem. Not every coin sub $1 million is a gem. Detecting them is a skill. This requires a framework or a criteria to finding it. It comes from experience to do it consistently. You have to know what to look for to find these coins. Other questions to take into account are how to decide when to buy and when to hold. Early in the cycle, you buy and hold. towards the end, take profits and wait for the flushes before rotating back in. So the good news is during this phase of the market, you have time to research. You have time to grab things at a discount. A lot of people lose interest during the best time of the market, which is the bear phase. And when prices are depressed, people have forgotten about crypto. Meanwhile, you have people excited about the stock market, which has managed to absolutely explode in the past few months and years. And crypto hasn't benefited much from that. Bitcoin has, but not the altcoins. And the altcoins will have their time to come back. But the good news is, like I said, this is the time to go out and research and look for opportunities where there are gems at very low prices. You just need the skill of detecting them. Moving on to the next state, the worst thing you can do today is force trades in conditions that don't support you. So you have to identify, are you making trades or are you making investments? Trades classified as they last from weeks to potentially 1 or 2 months, and then investments last multi-months. So you have to identify, what are you buying here? For what reason? How long are you willing to hold? So this is how I make my decisions based on this playbook, based on the game of musical chairs and attention, liquidity. All these different things come into play when I'm trying to make a decision of what to buy, when to buy it, how long to hold it for. Now, finally, I want to give you a case study of Unibot in 2023. And this is why it's important to understand when to buy something. So in 2023, we were in the phase of transitioning from the bear to an early bull. Okay, conditions transition from end of bear to early bull. We already saw runners that year. Pepe, April 2023. I remember this very clearly because I was looking at the Pepe chart at $4 million and I said I was too late to buy it and I completely faded it. Anyways, that haunted me for the longest time, but it's all right. I got over it. Moving on, if Unibot launched in the middle of 2022, during the crash, the odds of success would be much, much lower. Now, if you guys don't know, Unibot was a trading terminal. It was a completely new idea where you could trade off Telegram, and people went crazy for it. Okay, and that idea came towards, I think it was May of 2023. We began to get risk-on sentiment that not only enabled Unibot to run to 200 million, but also allowed liquidity to flow into other similar projects, Bananagun. And this was Unibot's main competition. Bananagun had managed to steal some of the narrative from Unibot. Unibot had first mover advantage, but they had other issues. Even though Unibot was successful, it still had fleeting attention. And if you guys remember, fleeting attention is for low caps, and Unibot at the time I bought it at 4 million, we went all the way to 200 million, and it was forgotten after a while because they had their own issues. Bananagun took over months later, and the meta ended up dying anyways. New bots and terminals came out with no tokens associated with them anymore. In crypto, the chart is simply the product. If price goes up, people will talk about it, it'll gain more attention. And that ate Unibot's market share. The chart started to drop. In a risk-off market, people don't wait for projects to fix their product. They abandon the coin and move on to the next potential. This is why you can't be loyal to a project in the depths of a bear, because you don't know whether they'll be coming back or not. This mainly applies to low cap projects. It doesn't apply to coins like I said, CRV, Link, Aave. We know these are important to the crypto ecosystem. And unless they get a competitor, which will be good for the space anyway, they're most likely going to do all right during the bull phase of the market. So this is how I view the crypto markets. I have a lens at which I like to operate from and make my decisions from. And the idea is you got to take attention to account. You got to take liquidity into account. And you have to change how you mentally approach the market. You don't approach it from an emotional state. You approach it from a mechanical one. So I hope you guys enjoyed this video, and it'll help you make better decisions in the upcoming bull market whenever that may come. So that's it, guys. I will see you next Tuesday on the next video.